occasion. And we'll be having the leader of the National Oil and Gas Company of the country, the GMD of the NNPC. Today is fully packed, and we're expecting a ton of participants. For that reason, the first thing I need to let everybody know is that the key rule is please minimize your video. And this goes to everybody. Please switch off your video. Please switch off your camera, switch off your video, and enjoy the show. For questions, we'll be taking questions across all platforms. We're currently streaming on LinkedIn, Facebook, and on YouTube. LinkedIn, Facebook, and YouTube. And you can ask questions on all those platforms also. All questions will be received via a chat. Just send a chat, your name, your location, and your question. Please make your question as brief as possible. To this end, let me invite my president-elect, Madam Pat Ochobu. You can see her, she's on the screen, she's been anxiously waiting, and I will hand over to her to share our opening remarks immediately. Thank you.
Thank you very much, Latif. Good morning, ladies and gentlemen. You are very welcome to the third in the series of NAPE webinars. We started this series in response to the situation we find ourselves with the COVID-19, where most of us have to work from home. And we find that members are a bit disconnected, and there's a lot of questions in the minds of everyone as to how do I move on from here? What's my future going to be like? What's the future of the industry? Things like that. So we are really delighted that we have eminent personalities to come talk to us about the impact of COVID-19 and how it impacts our industry. I really welcome all of you. And I want to also let you know that fine, COVID-19 is real. We are having to stay safe and keep social distancing and every other thing that the NCDC and the people in charge have asked us to do to keep us safe. But please be assured that the conference for this year, the national conference, it's planned and it's going to hold. We have all kinds of contingency planning in place to make sure that we have a very eventful conference. So I would ask that you keep your ears open for further information as to how the conference is going to be. With that, I would like to introduce our guest speaker. He is the GMD, the Group General Manager of the NNPC. His name is Mallam Mele Kyari, in case you don't know. He is a sound geologist, a very proud product of University of Maiduguri, and he has over 28 years industry experience, spanning from the Nigerian Geological Survey, even up to NNPC, where he went around the different subsidiaries, IDSL, NAPE, crude oil marketing, before being appointed as the 19th GMD of NNPC on the 8th of July, 2019. He comes with a wealth of experience, hands-on, both as a technocrat, as a management personality, and as somebody who has seen the ramifications of the industry from end to end. So please sit down, tighten your seatbelts, and please take copious notes, because I guarantee you, you will be enriched by attending this webinar. With that, I turn it over to Latif.
All right, thank you, my president-elect. Always good to hear from you. Like you said, watch out. The year, it's not just going to be about webinars. We have a lot of things that we plan to share. Now, for those that have just joined us, I need to go back and share again the rules of engagement before we bring in our special guest. Again, please and please minimize your video, switch off your video, switch off your camera. Everybody's muted. So, and that's the plan. Nobody's going to be allowed to talk. For questions, kindly send in your questions as a text, put in your name, your affiliation, your location, and your question. That's the format that we're going to be using for the day. Again, let me repeat, send in your name, no videos, no cameras, just listen in. And if you have questions, send in your questions. I hope that's clear. At this point, let's bring in our special guest.
Thank you very much, Abdul Latif, but I can't let the video come off. Am I restricted on bringing the video? Okay, hold on, one, okay.
Okay, you're coming up. All right, we see you live and clear, sir.
Thank you very much, Abdul Latif.
Okay. All right, so again, welcome to today's edition of our series, the June edition. We are really happy to have you as the leader of NNPC, the GMD, the Group Managing Director of NNPC. And for those that don't know, a member of, a fellow of NAPE. And when I met you the first time, you said you're a ranking member of NAPE. You probably share what that means with everybody some other time or during the event. Please, I need to reiterate, please switch off your video, switch off your cameras. For our guest speaker, it is pretty straightforward. We're going to avoid anything political, ethical, or religious. It will be strictly business and technical, and we'll dive in. But before we do that, a couple of fellows of our association have passed away, and we would like to recognize these individuals. So I'll start with Mr. Michael Ikemefuna Odua, who was a NAPE fellow, Dr. Meikanti Baru, an honorary member of NAPE, Chief Macaulay Ofuri, also a past president of NAPE, a fellow of NAPE, and finally Prince Adedoyin Lipade, who was also a fellow of NAPE. At this point, I will solicit everybody's indulgence where we recognize a minute of silence. Okay. May the gentle soul of the departed rest in perfect peace, and may we continue to honor the experiences we've shared with them. Having said that, the GMD, it's no argument that Nigeria is clearly number one in Africa, the number one exporter of oil and gas, and number one producer of oil and gas. The effects, the tsunami of effects of the pandemic clearly has affected every industry across the world. It's a global effect. It's not just focused on Nigeria. It's not just focused on the oil and gas industry. However, the oil and gas has been hardest hit. The combination of low oil prices and the pandemic could not have come at a worse time. The questions today will be around that, and will also be around conversations around how exactly are we going to be ready to be more competitive, because the oil and gas market is a global industry, it's a global competitive space. The margins are reducing, the competition is increasing. We have the unconventional oils, we have the greener energy sources. So those are where we'll be talking about today. Those are the conversations we'll be having today. Having said that, NNPC is the largest oil and gas company in Africa. There's literally no other company that can actually compete. It covers the entire value chain, all the way from exploration to downstream retail. We will be trying to examine how not just the pandemic, but how we want to position NNPC, the vision for NNPC in the future. And those are the kind of questions we'll be asking. So having said that, I think it's only but natural to ask you, how are we going to survive this pandemic, sir?
Thank you very much. And President Pat, I mean, you may not be aware, Pat was my boss. She also mentored me as a growing scientist. I'd like to clarify what I meant by ranking member. Probably were very few who are still members that have 29 years of membership of this association. I was a 1991 member of this association, and I think that is long enough. But I'm also aware that there are very, very good senior colleagues out there, some of them within the system, who are older than me. So I give them my due respect. And I also appreciate the privilege given to me to speak to this very, very distinguished audience of professionals and other interested parties and stakeholders. Obviously, it is a privilege. There's no doubt about that. And not many people have this opportunity, and I have not lost sight of that. And I'm most profoundly grateful to the Council of NAPE for allowing me to speak to this very august audience. Having said that, I also join the rest of us to commiserate the families of our deceased colleagues and members and very senior colleagues. We can't replace them for their families, but what we can all do is to support them and to stand with them in this trying period, while taking solace in God, the most graceful, for playing their parts in the lives of all of us. So thank you very much, and I join all of us in that respect. Now, thirdly, I know they are very tough times for the whole industry and for the whole world. And to bring this conversation to context, I would like you to allow me to take 10 minutes to share some slides with the audience, then we can come back to the question. This will properly situate the entire conversation in context. If you don't mind, Abdul Latif, I would like to share my screen with the audience. Then I can talk through it briefly, and then we can come back to the question and answer. I will answer your question on where are we on COVID-19 and its impact, and it will come out clear as we speak. So permit me this moment to share my screen with the audience.
All right. Let's just make that happen. All right, we can see your screen.
Yes, can see my screen. So, yeah, so let me come back to COVID-19. The oil and gas industry, as you have clearly pointed out, is a very, very critical component of the world's economy. And as the pandemic came and with its impact, we all know what it meant to the world, what the oil and gas industry means to the world. The first obvious casualty of COVID-19 is not just about people staying at home and lockdowns, but we saw what is very clear, that is a crash in the price of our commodity. Because at the end of every exploration work, production work, and whatever we do, at the end of the tunnel, we have to go to the market. Once you go to the market and you cannot recover your cost, then you have a challenge and it becomes very obvious. And because of the connectivity of the oil and gas industry to the rest of the economy of the world, banking sector, production, manufacturing, transport, everything you can think of, which is typically referred to as the GDP of the world in many contexts. There are many languages, many grammar that is used to describe what the world economy means. But what everybody understands is the GDP. What you can see on the screen here is it's almost a total collapse of GDP forecast as a result of this COVID-19. You can see by country as much as negative 16% GDP growth forecast for some countries, and for the world about negative 3% for the first quarter of 2020, and for the whole of the year. And when you look at it much narrowly, between January to April of this year, you will see the gradual collapse in GDP forecast by every institution that you can think of. And what that means is the economic activities were practically grounding to a halt, and the net effect is on our business, because countries have gone into lockdown. People don't go to work. Even in our country here, many people didn't go to work, and very many, even though it is localized in our country, but in Europe, in the United States of America, and in some Eastern countries, you will see total lockdown of countries. For instance, in India, you have a lockdown of over 1 billion people didn't come out to work for about 2 months. The result on our commodity is loss of about 8 million barrels of demand within that period. That is quite significant, and that contraction is forecast to stretch off the end of the year if nothing fundamental is done. But if people don't come back to work, if production costs are not done, you will see this situation playing out to the end of the world. And once you have that glut situation, where you have overproduction, oversupply, any name you call it, it affects your prices, because once demand goes down, prices go down. And we have never seen anything like this. Prices collapsing to as low as $13 at a point in time. In a day, there's a point in time where price of crude oil, for the first time, the Brent came down to $13 to the barrel. And beyond that, many countries responded differently. Most oil-producing countries decided to actually discount their crude so that they can sell the backlog of production that they have. And what that meant is that at a point, we are selling our crude oil at below $10 to the barrel. And in some jurisdictions, particularly where heavy oil is produced in Canada, we have a situation where people are given a check to come and pick crude oil for about a week's period or so. That has happened. What it means is that, you are producing oil, you are actually, in Nigerian parlance, you are dashing people oil. And that isn't sustainable. And of course, the industry was obviously heading for a crash. And where do you see, even though there's expectation from all of us that pandemic lockdown and economic slowdown will not be forever, but our business is so complex and so reactive that what you see is investments will go down. What the chart you see here is showing you how the collapse that we have seen in investment in the upstream in particular. And we have seen clear drop of up to 26% of investment opportunities in the upstream, and that's quite significant for our industry. The other part of it is for us as geoscientists, once the first casualty is exploration, that once prices go down, nobody will go into exploration. Even for development drilling, if you look at the screen here in the United States where data is clear and recorded, you see the crash in rig counts in the United States. Over 446 rigs were dropped within the first 3 months of the year. And of course, we all know that the rigs, you don't just drop it and come back. So it will take you time to come back. So once there's a drop in rig count, it means that production will continue to decline. It is difficult to come back, but there's nobody to fund it. And the other collateral damages. This same situation has played out in very many jurisdictions. We are a bit resilient here. Despite this situation in this country, our rig counts, even though it was not high in the first instance, but it did not just go down as dramatically as it is in the United States Gulf. So what did all this mean to the Nigerian economy? It created a situation of revenue instability for us. As you are all aware, there's a massive decline in revenue when your estimate is at $57 to the barrel, and then you ended off at the crude oil prices, below $13. Then you are in trouble. Then, of course, as that was going on, we needed to respond as a country, because the only way you can sell your volume so that you don't shut down is to reduce your prices. We decided to do a discount. In the market, it's called a discount, so that we can take out some value from the reference crude oil price. We took out as much as $4 to the barrel. That still didn't help. We still have hard cargo overhang. And the implication of that is it created some production uncertainties. We are not sure that production can go on. Our partners cannot continue to invest. We can see the visibility of a cash flow that will support the activities of the industries. And at the end of it all, it created huge production uncertainties. People cannot plan with us. And what every investor will do is to defer his investment under such situation. You don't have a cash flow. The banks will not lend you money because they cannot see visibility to your cash flow. And therefore, there are deferments of investment. We did it all across the industry. Every operating company has done it. And of course, we had some level of luck. We're able to take FID on some projects. But that's not what we wanted. That's not a level that we wanted. But that's the reality that we face. That means every company did some form of project deferment. And it also introduced project delivery risk. A number of projects can no longer be supported by the current cash flow situation. What it means is that there are significant risks on many projects. They may not be delivered within the time that we expect it to come by. So what does it really mean to the Nigerian state? Is this very important for us to understand? This country is dependent largely on crude oil revenue for budget support. Not because the GDP of this country depends on the oil and gas, but the actual cash flow comes directly from the oil and gas production and revenues, either in forms of taxes or royalties or direct revenues that come from NNPC, or even incidental revenues that are attached to oil production and oil revenue. As you may be aware, as we speak, most government revenues come from VAT. That is very true. But you will also discover that as long as oil and gas activities go down, VAT collection will become very low because capacity for people to buy, the industry that buys services that are subjected to VAT and naturally from the oil and gas industry. And the end result is that you will see an overall collapse in revenues that come to the Federation. At the beginning of the year, for the purpose of 2020 budget, we forecast $57 at the average price for good reason, because that was what was actually under forecast at that time. We were selling at 63 to 64, and we thought that 57 will run through the year, and the budget level was at 57. But at the end of all, when the realities came on us, we don't think that we can achieve any price, higher than probably average of 40 for the whole of the year, 30 to 40. So we decided to have a budget of 30, and that didn't work out because as the engagements were going on to agree on a budget number, the prices still collapsed to below 13. So we thought that the reasonable place to stay is at 27. But we know that changes are going on in the market. Price today at 41, 42. There's a hope and expectation that with all the rebalancing that is going on, it is possible that we can hit the $42, $45 before the end of the year to flat out for the whole year at 42 to 45, which will also compensate for the low prices during the months of March and April. So the impact is monumental, and it triggered a number of issues. We lost revenue. We're also able to run into budget deficits, which is very obvious. Both companies and countries run into budget deficits across the globe, in particular in our country. There's a slow growth in our projects, development projects. And also there are a number of project slippages that are obvious that we can all see. And of course, the mother of them all for the industry is job losses. As we're aware, many companies have around job costs of the excess of 30 to 40%. We in NNPC won't do that. We'll do something different. We'll cut our costs so that we can continue to maintain our workforce. But it was in some situations and for some companies not sustainable. Many companies today are in very high cost level. Most of these costs are coming from personnel costs, huge personnel costs on parallel in the industry. And when you compare our cost of manpower in this country compared to other jurisdictions, that we know we have one of the highest in the upstream in relative terms. So it is impossible to sustain this structure and continue to pay. The current cash flow cannot sustain it. So we'll not be surprised when companies consider possibility of cutting down either numbers or cutting down the cost itself. We did have a plan, and of course you have to react to this situation. We did an industry-wide intervention, which is to say, what do we do with our costs? Because you need to bring down your costs substantially. Our realization is that there are areas that can be utilized to bring down costs. A number of cost elements that we deal with today shouldn't be there in the first instance. COVID-19 has come with its own good part. We have now realized that how many people that we can do without, how many services that we don't have to live with. And the end result is that, we can work on our cost structure so that we can bring down our costs and then sustain production. We need to also put measures in place to ensure cost discipline across businesses. We're engaging our partners across all assets from the production sharing contract to the joint venture plan contract. The reality is that today's cost levels are unrealistic. Some assets produce in the excess of $40 to the barrel. It is impossible to sustain this. We are not in a shale oil environment. There are a number of environmental issues which we recognize. and which we are dealing with. There are security issues, there are laxity of active action of management and leaders. There are also even, let me call it bluntly what it is, even fraudulent practices that happens in the industry. The result is that you have costs that is not possible to sustain, And therefore, we must reset this cost structure, and which is what we are doing, and which is what COVID-19 has thrown at us. And our target is to come to cost structure of at least $10 to the barrel. It shouldn't exceed that, because it is possible to deliver at $10 to the barrel. There are assets today that deliver crude oil at $10 to the barrel. Crude barrel of oil equivalent, that's including the gas resources. So this is possible. And what COVID-19 has thrown at us is that we can do this, and our target is to arrive that number by the end of 2021. It is possible. We will chase this, we'll pursue this until the logical end. Of course, that requires the cooperation of all of us in NAPE. It's our members that are front line. We start the exploration work and including to development. We know that many of these things that happen in the industry, cost structure that is unrealistic, is clearly related to the activities of our members. Then we must optimize revenue. This is what we're going to do. We are going to have aggressive execution of projects aimed at conserving cash, because we are going to focus on projects that will give us more money, cheaper costs, and it will give us more resources. And this is unavoidable in a situation like this. We do not hope that this situation is sustained for too long. But at any time, even when crude oil prices goes to 123, for instance, the best case that we had in the past was 143 to the barrel. Even at that point, you don't want to produce beyond cost. You don't want to produce at cost that is huge. It is impossible to sustain this. And of course, companies will diversify portfolio, as we are doing in NNPC. You have to look at other businesses that will cushion the effect of a future cash crash in crude oil prices. Every company I am aware, and other company is doing this, and the forward plan for our country is to continue to diversify so that we can use the oil production and the gas resources as an enabler source of resource. And we are going to do things very, very differently. Issues associated with operational inefficiency across our businesses, both within the NNPC itself as a company and with our partners. We have engaged them. And these partners, all of us have recognized that there are inherent inefficiencies that we can do away with. And of course, the technology adoption, there are a lot of lip service around technology adoption, but in reality, most companies have not taken it to the highest level that is possible. This is what we are going to do. We are working with our partners, we're working within our own company to make sure that technology becomes the in thing, so that it will introduce efficiency. We can do things on schedule and on cost, and ultimately our cost of production will come down, and then the value to the shareholder can be maximized. Let me share this with you. What you can see on the screen here is the cover. We pull out the name of the operating companies, but every bar you see here represent in groups represent an oil producing company in this country. You can see some of our partners producing at $93 to the barrel. It is impossible. What it simply means that you are subsidizing this business. Others are paying for it. And there are assets that are producing as low as $9 to the barrel. So you cannot explain this gap between one company producing oil at $93 to the barrel and another at $9. It means the one that's doing at $9 is the one that is subsidizing. This is true both in case of our joint venture and production sharing contract. And it's unacceptable. This cannot continue. We cannot accept this. And the industry must work together completely to bring this down. And there are a number of things we are doing today to pull this down to a number that is acceptable. And our target, as I repeat, our target is to bring it down to $10 to the barrel for everybody. If you can't do this, you walk away, because we cannot, this is not business of subsidy. Upstream is never subsidized anywhere in the world. It's either you make money or you walk away. And typically countries or companies shut down assets that don't produce, that are sub-economical. And so for so many of them, they have lived this way. They have continued to rely on the production and the revenue generated by others. And this, of course, is completely unacceptable. And coming to the developments in the industry, the future is in gas for every country, particularly Nigeria, that we're a gas province. We're not an oil province. We have over 200 billion TCF of gas resources available in this country. We have not utilized any component of it, and it's a fragment of it that we have put into use. But no country has developed without having power. And the picture you are seeing here, to your right, if that's part of your screen, is South Korea. And then to your left, the bolder place that you are seeing, the bigger place is China. In between, that dark place you are seeing is North Korea. And it's an indication that it is a midnight picture from space. The only dot you are seeing there is Seoul, Pyongyang, North Korea. Otherwise, you don't see any part of North Korea. And this is clearly reflective of level of development, and power is a very good indicator of development. And what we have to do as a country is to make sure that we're able to put all necessary structure and infrastructure to bring up power into our country. And to do this, the easiest resource that you have is the gas resources that we have, and we're focused on this. You may be aware that today we have 23 gas power plants with installed capacity of 9,000 megawatts, about 10,000 megawatts. Today we have available generation capacity of about 5,352. But today the contracted gas volume that you have is just 1.4 billion scope. That's very, very low. And of course, in a country of 200 million people, when you are producing power today, the actually produced power is about 12,000 megawatts. It is impossible to sustain. This is why we are underdeveloped, because you don't have power, you don't have development. What this country needs today is at least 30,000 megawatts of power. The plan today in government is to drive it to 25,000 megawatts within the next 2 years. That is possible, that is realistic, and we're focused on making sure that we make the gas available, we invest on the power plants so that we can add more power plants to the grid. And then, of course, as you may all be aware, in the media, you hear all kinds of stories about the Siemens Project. The Siemens Project is unavoidable. We simply don't have a choice. We do have to make sure that the power that is generated gets to the end users. If you don't do this, you are wasting your time. It simply is useless producing power that you cannot deliver to the grid. Today, anytime you have power production in the excess of 5,000 megawatts delivered into the grid collapses. So you are able to debottleneck this grid, which is what the Siemens Project is trying to do, to make sure that transmission lines are upgraded, the distribution lines are upgraded, so that this power, once created, it can get to the end user. And this is what is happening. We're supporting this fully. We're making sure that we deliver all our transnational pipeline from the ELF expansion to the OB3 crossover into the ELF, so that we can expand our domestic ability to deliver power, including the transnational AKK pipeline, so that at the end of the day, within the next 2 to 3 years, we know that it is possible to have up to 8,000 BCF of gas, 8 BCF of gas, put into our grid. That will transform into monumental shift in the realities of our country. It will enable power to industry, power to homes, and also to provide basis for some gas-based industries to come in place quickly. And we are very optimistic this will work. We have gotten financing for most of them. There are significant interest by stakeholders to make sure that we can deliver on the rest of them. Ultimately, for us as professionals, it is important that we focus on gas. Gas resources is everything. We now start looking for gas. As you are aware, nobody goes to explore for gas in this country. Most of our gas are incidental. Most of them are associated gas, but in reality, when we are doing exploration work, we do not go to explore for gas. Probably in the future, as developments come by, we may probably start going to that direction. Ladies and gentlemen, I would like to thank you. I think I've as I said, I will speak for 10 minutes, but it's more than 10 minutes. So let me stop here. Then maybe the questions can bring up some of the issues. But fundamentally, this is possible. This COVID-19 is a blessing in disguise in very many ways. The only thing we have lost, I've repeated it in many audiences, the only thing we have lost is price, and price is coming back. Thank you very much. Abdulaziz.
Wow. Okay. I think you had an idea of the kind of questions to come, and you tried to address them beforehand, but there's still a lot to ask. And I like the title of one of your slides. It said battle line. And it seems that there are multiple battle lines that the NNPC and the country needs to address. So one of the things you mentioned is the industry-wide intervention. Can you shed more light on the industry-wide intervention? Because I believe anything, whether it's a palliative directly or indirectly, currently everybody's looking for any opportunity to save costs, to essentially reduce the impact and the consequences of the very low oil price and the pandemic. Can you shed more light on the intervention, sir?
Yes, thank you very much. What I meant is it's a process. We started before COVID-19 came. when we took charge, we all along that our cost of production is very high. And that cost of production is unacceptable. It's as a result of a number of issues, structural inefficiencies that exist in our system and in our processes. There are also issues around environmental consideration. Environmental, what I mean is that the area where we operate today, every contractor will factor in risk for doing business here, whether in terms of providing human resources or materials or asset, whatever you think of. Every cost that you have here has a premium that is related to our environment. Those premiums are very exaggerated. It is not true. It's not reflective. And suppliers and contractors and companies have taken advantage of it to hype up costs in this country. And that's the reality. And that's one of the things that we're also facing. And then thirdly, there are planning issues. We have become a transactional industry. People are only bothered about putting contracts in place or who does this and all kinds of things that happen without worrying about it. What's the end value of this? And to that effect, and more specifically, when you are dealing with our local oil companies, and I'll be very bluntly frank with this. In our relationship with our partners, particularly the local oil companies, they have the list of governance structure. Processes are clearly not significant. And it has also kind of a way of wiping on even the international oil companies. The end result today is what you are seeing today, which is producing oil beyond its cost, which is, we know it is possible to bring down. So what we did was to start facing this challenge. So what can we do about it? Let's plan together. Let's look at the projects together. Let's see what exactly do we even stand to achieve by getting these projects in the first place. And that conversation was going on, then COVID-19 came. And there was significant progress where industry engaging our partners, both the local oil companies and international oil companies, to make sure that we bring this, including our own 100% owned company, the Nigerian Petroleum Development Company. I'm sure you're aware of this. As that conversation when COVID-19 came, and it threw the challenges at all of us. That oil can now sell for less than $10 to the barrel. So you cannot continue to produce if you don't do something about the cost. And it became a very, very clear opportunity for us to hype up our engagement with our partners. So we have an industry-wide, we don't sit with all the industry on the table to discuss this. We have individual agreement with each company, but we have the same framework. Everyone knows that cost must come down. We must have a conversation. We must agree that this cost must come down and what do we exactly try to do. The result today is that there are structural shifts from what we used to do to where we're going today. We have clear visibility around having a $10 oil by the end of 2021. It's either you produce it at that low cost or you shut down. If you are not it's either you're in business or you are not. So we're no longer in that emotion of one business subsidizing the other. That's what I mean by the industry-wide approach. If you are talking about palliatives for business, in some countries, I'm sure you're aware of this, in some countries, government have come in to intervene in supporting producing companies. It has happened. Even in the United States, even the mighty, I don't want to call their name, even the mighty have gone palliatives. But here, the whole country and the whole nation and the whole share, 200 million share, actually looking up to the oil and gas industry. So there's no possibility that you are going to get any palliative from government supporting Nigerian companies. Yes, there are things that can be done. Tax issues can be resolved. Can Department of Interest Rate and so on and so on. The state can do many things, but not to give some cash handout to any business. That's not possible. So in terms of palliative, I'm aware and I'm part of a team that is working on this to see how can we support all companies, particularly oil and gas companies, in way of managing their relationship with their banks, how the CBN can intervene, and how we can come in to see their tax issues, and so that ultimately we keep them running. But we are not in the business of subsidizing because we just don't have the resources to subsidize this. So business must also look backward and see how they can cut their costs and also deliver ultimately. But also the third element of palliative, which I need to speak to quickly, is the issue of palliative to support the country. The industry has done great. We're able to pull ourselves together, both the upstream, the midstream, and the downstream, to bring combined support of 21 billion naira. And not what you see in the media. We're not doing 21 billion naira in Katsina. That's not true. With the total package, 21 billion naira of support from the entire industry to support the COVID-19 intervention that we are doing. We are building hospitals, we are providing ambulances, we are providing medical facilities to all states of the Federation, particularly focused on the Niger Delta state, because that's where our business is. We're a business, we are not an NGO. We are doing it to make sure that the whole country feels our impact, but we're very focused on our area of business. And that is why most of the intervention we are doing today are focused centric to the Niger Delta. And we're proud doing this. Is really not a favor. We are doing it because this is the right thing to do. And the end result is that in the coming years, we are going to put permanent facilities that would outlive COVID-19, and that would be of use to every one of us. So that's really what I meant by palliative. So 3 segments. I hope they are clear.
All right. So first things first, I will be jumping in because there's so much to cover, and you're a very busy man. At the right time, you will signal and you have to go. So you have talked about intervention, and by being explicit, you've actually said this came way before COVID-19. Now, there is no way we can afford monetary type palliatives. We can't even afford it. So we're not talking about that type of palliative. We're talking about physical and regulatory type of slacks that would essentially reduce the pressures that are going on right now. I do understand what you mean by ensuring that we need to ensure that the cost per barrel, OPEX, is competitive, not just internally, but globally. But right now, there are specular issues in country. So for instance, mobility is significantly hampered due to the pandemic. Right now, especially the upstream, different companies are coming up with significant, convoluted and complex medical type screening, which invariably put another layer on their cost. So I'm very happy you said that you're looking into CBN and the Ministry of Finance, but what specifically are you looking at? What type is it deferment of certain payments or levies or taxes? And yes, we all understand Nigeria depends on the oil and gas industry, but at the same time, if the oil and gas industry does not survive this, then our dependence essentially, we're all intertwined. So specifically, what palliatives are you thinking about? Maybe not necessarily is firmed up, but what exactly are you thinking about as an intervention for this specific issue, the global pandemic?
Yes, I understand your concern. I will not be able to speak about the specifics because it's still work in progress. There are conversations.
Okay.
But what is very obvious is this government is aware of the situation that the oil and gas is facing today. There are businesses that are clearly challenged. There are support that are obviously required, and there are conversations going on to make sure that how can we help these companies to survive. I will stop at that. I don't want to go into the specific, but what I know also is that the companies have to also play their part, which is by making sure you do what is only necessary. You know that there are a number of extreme things that we do in this industry which are not required, which COVID-19 has helped us to recognize and identify. So the companies will have to work on that while we look at the fiscal interventions that you are referring to. But I know and I'm aware, I can confirm this, that there are ongoing conversations to bring some succor to oil producing companies so that businesses can survive.
Okay, so that works.
I don't think I can say more than that.
No, that's fine. That's fine. So now, what you can talk about, as we speak, you have multiple business relationships with different players. There are over 160 oil and black concession licenses in the country. You currently operate in over 70 of them, if not 80. And the relationship you have with your different partners vary. The joint venture, the PSCs, the PSAs. Currently, there are drastic cuts in funding. And you mentioned it a couple of times. Some projects will be deferred. Some outrightly, the value proposition that was modeled before this period will be eroded. But it seems like these budget cuts seem to be making significant inroads into actually completely eroding the value and making things go negative. How best do you actually plan to review these budget cuts because everybody is crying. And remember, it's not just about your partners, that direct implications. So when you cut these budgets, project staff, then you're essentially tweaking baseline production. Already we have containment, which effectively is affecting revenue. But the ripple effect is that service companies literally don't have jobs. And then comes in what you said earlier on, people are fired. Employment, the tsunami, which was the word I used earlier on, of impact on employment and labor, we are yet to see the full implications. So as regards these budget cuts, how are you ensuring that these budget cuts are done in such a way that it preserves as best as possible, as optimal as possible, the value proposition of the budget, of the projects that they were intended?
Thank you very much. I think it is not a blind cut. First of all, let me start from the production. I think you need to appreciate why you have to cut your production. It's needless for you to produce oil below cost and send it to the market. So the production number can be very high today. You can have, actually we have visibility to producing 3 million barrels per day, within 2021. It's clearly within visibility because we have a recent number. During the pandemic, in one day, that's a day we hit 2.4 million barrels per day without doing much of intervention work. We're still investigating why that happened. But if you can hit 2.4 million barrels per day without doing much work, then of course, with knowing all the projects that are lined up between now and 2021, we know that hitting 3 million barrels per day is very realistic and realizable. But you don't want to produce 3 million barrels and just, let me use Nigerian balance, and dash it to people. You're not in business to do that. So as you are creating your production system, you are also conscious of the fact that you need to sell to recover your cost and make a margin out of it. And that is why we had no difficulty aligning with OPEC Plus to bring down our production to the level that we are doing today. Because it is not a permanent arrangement, it is temporary, it doesn't distort our current plans, and we know that we'll exit this sometime by end of 2021 as projects progress. But as we have certainty around the production sources, all you need to do is to kick in at that point in time. So that addresses the production part of it. Now, when you come to budget cuts, when you don't have money, you don't have money. So there's nothing you can do to do things differently. When you don't have money, what do? You borrow. It's either if you need money to fund your project, it's either from your cash flow or you borrow. There are no other way of doing it. Or get somebody to put equity, still borrowing. So if nobody is there to lend money to you, and then the production you are doing is not converted to, because you are now selling it like water in the market. So you simply can't afford it. Nobody will lend you money. You don't have the cash flow to support it. So you have no choice than to cut your project. And your project you have cut your budget. When you cut your budget, that affects your projects, obviously. As you are doing this, you don't do it blindly. You look long-term. Look at the projects that give you the best money today. You sustain them. The ones that some of them are very exotic, I'm sure you're aware of the Latif, some of these projects are quite exotic, you park them. And the overall result is that you're going to have a cost cut that will bring you to a level that you can afford with the resources that you have. Let me share this with very many of our partners. When we ask contractors, look, take a haircut of 20%, 30% from this contract cost, otherwise I walk away. Very many of them accepted it. Not because we have a choice, but because our conviction today is that because the projects were in the first place inflated. All those factors that I've mentioned where costs are dumped into this project, risks that don't exist are put into this project, and sometimes other elements that I can't even explain on this platform result in companies accepting to, you go to tender here, it's the same kind of contractor you are dealing with. You know this. If you don't know, I'm telling you. You have this kind of contractors that are dealing with. When you go to major EPC contracts, contractors do sit down and agree who does the next project. And the end result is that you are left with the kind of cost structure that we have. And what we have learned from this pandemic's approach is that these costs are not realistic. They can be brought down if we work together as a team so that this industry, so if you don't do this, you cannot avoid the job losses and job cuts. You cannot avoid shutdown of certain businesses. And the only way we can do this is to manage our costs, manage the resources that are available to us. And by doing this, you cannot do this until you look at your budget. and you're doing this smartly so that you don't take up projects that shouldn't go up. I don't know if this explains your concerns.
No, it does, but there's something you mentioned, and I think that might actually put everything in context. What is the vision right now? What's the vision for the Nigerian oil and gas industry? Because by understanding the vision, then we'll be able to understand the directive or the direction, and understand how all the stakeholders can plug into that vision. Because a target of 3 billion barrels or raising reserves to 40 billion, that is not necessarily a target. That's not necessarily a vision. That's a target, but not a vision. So what is the current vision, sir?
Yeah, the current vision. Let me go to the bottom line. This is business. This industry is business. It's not NGO. So we are looking forward to a $10 per barrel industry. Simple. And you need to do so many things to arrive at that. You have to be more efficient. You have to be more cost conscious. You have to plan better. You must be more realistic. You must be more prudent, and there must be the appropriate leadership to drive this. So our vision is to see a $10 per barrel industry, and it is very possible. Once you have that $10 per barrel industry, arriving at the 3 million barrels per day or increasing reserve, they all become easy. And I agree with you, they are not vision, they're actually targets, are commercial numbers. But they are very realistic. But ultimate thing for this industry is at what cost do you produce? Because that's what takes you to the market. That's what gives you your margin. That's what enables you to pay your taxes and royalty, and that's what matters to the state. And once we don't achieve this, we are not an efficient industry, and all of us must work together to make sure that we achieve this. So our vision is to see a $10 per barrel industry by 2021. Short term. Wow,
that's a very, very, very aggressive vision. I'm sure all stakeholders, if there's anything they will live with, it's that. Now, but again, as we speak, everything we are producing effectively was discovered, and we are both explorationists, so I'm sure you can identify with this. Everything we are talking about right now was a function of exploration, the actual hard work exploration. Now, we have actually not shot any high-end exploration seismic data that's of significance in about 3 decades. We've not had a bid round in about 13 years. What are your plans to spare on exploration? Because exploration does not translate to immediate barrels. The life cycle of a big giant is about 15 years. Our current reserves, factoring in our current production, will last about 50 years. So what is the plan to essentially rejuvenate exploration? Because currently it is dead.
Yes, I understand. First of all, I understand the framework. When you don't monetize your available resources, you cannot invest. And that's the challenge that we have today now. We're not able to monetize the available resources efficiently. That means we are spending more money than we should to develop the existing assets. And the end result is because when you have less money to put on projects and you decide to put them on the wrong projects, so you will not have money to put on the exploration activities. And that's what killed exploration in the last 10 to 15 years. The companies are focused on monetizing at very high cost, and ultimately they do not have the cash to put into exploration activities. Despite all the interventions of government, as we speak today, only NNPC has a seismic crew running in this country. I'm sure you are aware of this. Nobody else is running a seismic acquisition activity today. We are the only company who are drilling. There are many companies drilling, but we have a rig running today. NNPC is running a rig, of course, and I would like to share with you very productive drilling activity that is going on. So we are the only company probably doing exploration work in this country of wide scale, but that's not enough. Everybody must come back, and the way to come back is to expand monetization so that the cash is available for people to put back on exploration. And also by virtue of deliberate government action, which is also ongoing, which comes to the issue of licensing, either for the marginal fields or the substantive block. We are going ahead with the bid round. I'm sure you're aware, it's in the media. Yeah. Marginal field licensing will be out. As you're aware, most of these marginal fields have already established resources. So most times you have the right data, you may not need to have new exploration activities to monetize those resources. But that's what they're marginal. We already know there's work that you need to do. So that will probably provide the cash, quick cash for people to go back to the major exploration work. And we're waiting for opportunity to close on the petroleum industry legislation. I don't want petroleum industry bill because there are a number of things that are happening. We are working on it. I'm very aware of what is going on that. You don't want to go into a substantive bid round without having a clear legal framework. Marginal field is very understandable, is small scale, is already existing joint venture framework, is already very, very competitive at times. So we know that that can run. But for going forward to having the large scale exploration activity or licensing, you do need clearer fiscal framework and a more softer fiscal environment, more competitive so that others can put their money into it. Once you have new blocks, obviously exploration work will come back very quickly. And we have a line of sight on that. We think that will be done with the PIB this year. And by next year, we are close on the licensing round. You will see exploration work will pick up in 2021.
Okay, so I want to jump on two things. Immediately you said marginal field, everywhere lit up. I have like a ton of questions around marginal field, and we will talk about that. So first, I need to first apologize and implore you whether we can extend with an additional 15 to 25 minutes, because we have a ton of questions. Would you be able to accommodate that?
We have to shut down at 1:15. I have a pre-commitment for 1:30, so I have to leave at 1:15.
That works with us, sir. Thank you so much. Now, first thing first, you talked about seismic. Literally, without seismic, effectively, there's no exploration. The cost of seismic, especially onshore.
Sorry, 12:15. I only have 20 minutes. That's what I mean.
Okay. Let me skip through that. Let's talk about the marginal field right away. A couple of people say that the entire marginal field exercise seems to be all about deriving and generating revenue on a quick short term. Whether one is successful or not, there's effectively a fixed amount of money, and it seems like unlike the last one that had like a 50% or 40% success rate, this one is not really focused at ensuring that the participant technical capacity is sound. It's more of focused on being able to, what's the word our last guest used? Seeing rent focus. So pay for this, pay for that, pay for this, pay for that. Do you have any conversations or opinion around that statement?
I don't know if Director DPR is logged into this conversation. He will be in the best position to speak about this. This is his call. But I will not dodge responsibility. I hope he is. He just find out if he's listed, he can speak to it. If he's not, I'm aware that this is not rent seeking. Government is not in the business of rent seeking. The objective of this process is to create more opportunities for Nigerian companies. These fields have been dormant for 30, 40 years, and nobody's doing any work. It's not in the scale that major international oil companies or major companies will take interest in. And that's the key persuasion for government, that we can bring this out. It can create opportunity for smaller companies and smaller interests to take stake, develop this asset and create job employment, and also create development for our country. That is the focus of this exercise, is to pull this out and make it available. And in the process of doing this, you obviously must have a framework. There must be a governance. In every country, once you do a bid round, there must be a process. There must be a license fee. There must be data that you will evaluate. You have to pay for those. It happens everywhere in the world, and that's clearly not the objective. I'm very convinced. If Elijah always listening, Engineer always listening to me, and I'm sure he will confirm this. As an insider, I know that the objective is not to gather money for government, but to empower small players so that we can monetize these assets.
Okay, because of the time I know you don't have, I'll be running through the questions. So I have a question from Edith Leonard. So the questions will be random. We'll be jumping from one topic to the other. He's talking about the graduate recruitment process, and that he jumped into that and he has not heard back from the exercise. What's the status of that graduate recruitment process?
We have recruited 1,050 young, smart Nigerians that were already onboarding them. We're very proud that we're doing it online. We're training them, we're teaching them, we're putting them into our system. So it is not true that we have not closed out the graduate trainee recruitment. And let me use this opportunity to say that every state of this federation has at least 25 candidates recruited by NNPC, without exception. We also took deliberate steps to make sure that there are additional candidates for all the oil producing countries. We're a very inclusive company, but we're also conscious of our business environment. That is why we also took a definite and deliberate step to make sure that there are additional candidates coming from the oil producing state. What he may be referring to is the recruitment of the experience hire. We did 2 sets of recruitment. One is for the graduate, and then the other part of it is for the experience hire. We have not concluded that exercise. The EH component was done to fill certain skill gaps that we do not have. On the basis of that, we conducted an interview. We have not brought out the outcome. Once you are looking for people to close existing skill gap, it also means that you don't have those skill gaps. We are defining our needs. Make sure that those we recruit are actually people that we need. It is not mandatory that everybody possesses the skills that we want. Many people assume that they have the skill that we need. We determine the skills that we need. We have conducted an interview. In many cases, we haven't seen those skills in some of the areas that we are looking for. Graduates, it's very understandable. We know they are graduate trainees. We are bringing them. We are going to shape them, train them to work for us. But when you are picking experience hire of that magnitude, of that scale, they have to fit into your needs. They have to provide the skill. You don't want to bring in someone and start training him here. We don't have the time for that. We don't have the patience for that. But we'll go back to the candidates as soon as possible.
All right, so jumping to the next question. You talked about your focus being a $10 per barrel. That's your focus. And 2021. The question is this, and this question comes from Dipo Agbola, NSC Abuja. He said, how do you want to achieve that with the proposed increase in NDDC rate?
I didn't hear you. Increase in NDDC rate or what?
Yes, the proposed increase in NDDC rate. This is from
NDDC rate now. I don't really, maybe can you clarify, Mr. Agbola, what do you really mean? Can you speak to him? Because when you say NDDC rate, what do you mean? Is it the payments due to NDDC or what?
I will allow him to do that himself. Let me jump to the next.
A guess on what he's trying to say. There will be a industry deal that will come into play. We're working on it. Once that is done, it will look at all possibilities. So making sure that companies are not taxed inappropriately, payments are not delayed, investments are optimized such a way that there's a basis for investment which will guarantee that even when you produce at $10 per hour, you still make. It's a futuristic thing, obviously, but I can assure you that everything will be on the table when we're doing petroleum industry. Every cost that the industry will see.
Okay, so in the last, I'd say, more than a decade, all efforts to essentially rejuvenate the refineries have not been successful. Gencos, Discos effectively have been complaining about not being profitable. So the question from Jeboda in Lagos is the NNPC looking at getting into the power plants or power generation industry, or what's their interface? That's one. Second question is, are we planning to actually sell the refineries? Because clearly we've not gotten it done right. What's the plan for the refineries?
Yes, I agree. Let me start with the refineries. Obviously, we didn't get it right, and I'll admit that. And I've said this in very many fora. All efforts to fix the refinery in the last 20 to 30 years, as you may be aware, were bungled, literally, because we didn't take the right steps. There are too many processes that were not optimized, were not properly done. And the end result is that you almost have a refinery that is at the brink of possibly balkanization. But we wouldn't do that. And this is great national asset of strategic significance to our country. As you may be aware, about 70% of entire gasoline consumption in West Africa is in Nigeria. So that means the gasoline market in West Africa is Nigeria. And this is a business that can thrive. This is a business can do well, but you cannot have gasoline when you don't have a refinery. And the opportunities that you have are very limited. First of all, this country owns 4 refineries, combined capacity of 445. Today, all of them are on shutdown, and we did it deliberately and strategically. There's no point doing some kind of batch processing in a refinery. You cannot run a refinery after 3 months, you shut it down, you bring it up, and so on. So we decided that there's no point doing this, because what it means is that it will be suboptimal. You may not even be able to recover the cost of the crude. But what do you need to do? And I can share this with you also, with the entire audience. We didn't do the refinery rehab activities right over time in the last 25 years. We call it all names, turnaround, maintenance, whatever name you call it, but it wasn't done right. And why didn't we do it right? Because the whole strategy was not correct. You go to fix your refinery without knowing exactly what you want to do. So what we decided to do is, like, what exactly is wrong with this refinery? Is it just enough to call somebody and ask him, come do a turnaround maintenance for me? That's what we have been doing. So we have changed that concept. We know what, for instance, today we know what exactly is wrong with Port Harcourt refinery. We have the financing for Port Harcourt refinery. We were putting in place an O&M structure. So even when we complete the maintenance of rehab of this refinery, we will not operate it ourselves. We'll give it an O&M contractor, which is best practice in the industry. And not only that, we're also going to make sure that, ultimately we advise the owners of this company run the NLNG model. We don't want to own this refinery. There must be private partnership, private intervention into this process. As we are doing this, as we speak today, we have a second level of strategy which will take away leadership from us. And we are happy to release this, is that we are going to have a sponsorship or financing of this refinery from the private sector. We will do it on a BOT basis, both for our refinery and for our pipeline network, such a way that whoever puts his money, you repair it, you do an O&M, you operate, you take back your money and leave it for us. That way, you are sure that even without losing ownership of this plant, you are sure of value, you are sure that it will be run efficiently, you are sure that interferences will be very, very minimal, and ultimately you will have a refinery that is so. That's our strategy. But beyond this, we're also looking at new opportunities. Today, we have enormous condensate opportunities. We are making commitment from very many partners to make sure that we have some condensate splitter plants put in place as quickly as is possible. That is easy. We're approaching FID on one of them. We have a target of 200,000 barrels per day in the short term, so that ultimately you have 200,000 barrels capacity condensate plant in 5 locations, which will be delivered. And lastly, we'll support Dangote to deliver the 650. The combination of these 3 will make sure that this country is completely energy sufficient in terms of petroleum product, will become the market for West Africa. And actually, we foresee a backflow of product into even Europe. So this is what is happening. And for Gencos, I'm sure that we have no business with the Gencos, with the discos, but we have business with the generating companies. And when we give them gas, they must pay us for the gas. And today they have constraints why they cannot pay for the gas, which is that, the discos are not able to recover costs from the customers. As you know that, I don't know if you pay full fare for your gas, for your power, but many people don't pay full power, so they cannot recover costs. So it has a backward integration risk, which to the gas supplier. And then once the gas supplier doesn't get his money, he will not invest in gas. And then you have that confusion that is going on. But we're taking that out one after the other. The Siemens intervention will free the network, will make sure that the power is available to everybody that needs it. And then, of course, electronic recovery, of course, will come in, and ultimately that process will play out. So this is how we play in the
So I want to dive into that quickly. The infrastructure to evacuate gas is not ubiquitous. Essentially, most of it is concentrated on the West. Are there any plans to essentially liberalize the ability for people to invest into just infrastructure rather than just it being a completely government pushed or activity? Secondly, you've talked about the PIB. Where is the PIB? As the executive submitted it back to the legislature, where exactly are we in that process? Is this something you can share with us as the PIB? And then finally, to again, back to the $10 per barrel, the contracting process effectively has been protracted on average. What plans are you doing to make it more efficient, to ensure it's shorter, to ensure that it's competitive globally? That when you take this contracting experience and you compare it or benchmark it, like some of the graphs you've shared, the same way you're trying to drive down the price of a barrel, you're also trying to drive down the time it takes to award contracts.
Yes, a bit futuristic, but I can share with you that we are looking towards an open access network platform for both gas and liquids. What it means is that anyone can invest. You can invest in segment, you can invest on an entire network. As you are aware, DPR has come up with the gas network code. And what it simply means, you can put their money, you can recover your costs. Anyone can put his product into line and take it at the next point. So there is space for private sector participation. And in terms of the cost of oil that you are referring to, the $10 per barrel target is very realistic. And the way to do it is this: create more efficiency, make sure that you don't buy what you don't need, make sure that you don't go and create your wife and core family who will be supplying product to your company, and ultimately you build up costs, and that's going to go away. Everything will be done on the basis of a transparent and accountable process, so that companies will have an envelope within which to play. If you know that you cannot deliver oil at that cost, you just pack up and go. I think that will solve the problem. Because today, there's leverage for you to produce at $93 to buy, nothing happens. And that doesn't happen anywhere in the oil. No investment works that way. At the beginning of every investment, you have an assumption that I'm going to produce this oil like this. This is the margin I'm expecting. I'll pay X royalty and taxes. But once we make those assumptions, we start the project, we know that ultimately we'll end up with something that is opposite of that, and then we live with it. And the other businesses that are able to keep to those cost limits are the ones that are financing the others and subsidizing literally. This will stop. Today, as a policy in the company, in the corporation, as the representative of the investors, the 200 million Nigerians, including you, Abdulatif, no business. You cannot take the cash flow from Chevron to, for instance, to pay for the businesses in Shell, or take from Shell and pay into ExxonMobil. Every one of them will stand on their own. If you cannot make cash flow enough to support your business, you are on your own. The banks will not trust you to give you money. That means in the first place, we shouldn't even have business with you in the first instance. So the combination of this will bring discipline to everybody. That if people know that nobody will subsidize you, if your cash flow cannot support it, if the banks can't trust you to give you money, you shouldn't be in this business in the first instance. This is where we're hoping.
Okay, so the PIB, where is the PIB?
Yes, PIB has a process, as you are aware. I know this is also not my beat. It's for the Honorable Minister of State Petroleum Resources to speak about it. But I'm also that I know what is going on. There's an ongoing process that will materialize, and I'm sure you've heard the Senate President speak in very many fora. They are waiting for the PIB so that they can process it. There's significant work done. There are engagements that are going on, and I'm very convinced that our target initially was to deliver this by end of July. And COVID-19 has brought many issues. Now we're talking to ourselves on television. And as soon as the lockdown is open, more engagements will take place and make sure that the process is. We have lost time because of COVID-19. This is a reality. But I know that within this year, we'll be able to deliver on the petroleum industry legislation.
Okay. So Mr. Derek Odonduri, Nigerian Maritime University, is asking, emission of greenhouse gases in Nile Delta is massive. There are even portions of Nile Delta where pollution is so severe that you have soot. Something called ultramicroscopic silicon volcanomyces. It's a disease that affects the lungs because of fine particles that people inhale from soot. What is the plan and outlook to ensure that there's a much better, greener footprint, more environmentally friendly operation of the oil and gas industry across the country, especially in the Nile Delta?
Yes, I understand the concerns around environment. Of course, the whole industry is focused on making sure that we have a clean up footprint. But the reality today on ground is two sets of things happening. One is the deliberate flaring of gas. Because we couldn't monetize it, it's cheaper for you to flare it than monetize it. And therefore, companies opt to flare it and pay the flare penalty. But they are also aware that there are enormous activity that is going on, being spearheaded by the Ministry of Petroleum Resources and the Department of Petroleum to monetize all available gas flare location. That will take out the deliberate gas that is being blown into the environment. Then you have the second component of it, spills that happen on our operational lines. for two reasons also. It's very good to understand that there are those that are as a result of integrity issues, natural age, and also failures associated with operation. They can happen. You can have spill on that. Then you have the second type of it, which is done by bundles. These bundles are of two types also, I'm sure you know. One set of them are thieves who are looking for the oil, and another set of them who are looking to just vandalize the facility. The second component of it, the bundles who are doing it out of anger, out of frustration, this is content because of the engagement, the robust engagement, particularly Mr. Vice President is doing with the industry and with stakeholders. And that has significantly gone down, almost eliminated. But you still have the other element of thieves who attack our pipeline. You have the aging issues, which we are addressing through more investment in integrity projects. And the combination of all this, and with conscious decision by all businesses to make sure that you restore the environment. Once there's spill, you bring it back to normalcy as quickly as is possible, is reducing dust element. But there are clearly challenges in the environment. There are things that must be done and must be accelerated, including the organic cleanup. Everyone can stick straight to it. There are activities going on to ensure we include the organic cleanup. Investments have been made, cash have been made available, and processed on ground. And ultimately, with the entry of NPDC, NNPC company into that area, I can assure you that that process will be accelerated to delivery. And unfortunately, I'm getting very.
Can we squeeze in 5 minutes before you run away, sir?
I can take your concluding remarks because I do have to leave.
Okay. All right. So I'll combine the three questions. The first one is from Diri, geoscientist from Aberdeen. She's saying, what steps are being taken to manage the impact of all of this on supply chain and operations as it affects jobs? So that's the first one. The second one is a different one. We have significant discoveries in deep water, from Owowo to Bonga Southwest to Insiko to Ea. We have a ton of discoveries in deep water, and effectively we've been pushing the FIDs back and forth. If you lump all that together, that's over 3 billion of discoveries just idle. What are the plans to ensure that we commercialize those discoveries ASAP?
Thank you very much. I think let's call it bluntly, what is the impact of COVID-19 on job losses? Once business gets bad, you lose money, you don't make money, you are not able to meet your commitment. You have two options. One is to reduce your spending. That spending can come in form of reducing earnings or salaries. Let's call it the raw name, benefits of workers. So for you to retain your workers at that level, you probably say, okay, gentlemen, let's cut down our salary by 50% so that all of us will remain in business. That's one. Second option is, look, I can do away with 50% of you, and then I can continue to pay the rest of the 50%. That way, it means the same thing to the business. But that's what the consideration many companies are doing. It also introduces another layer of efficiency. Sometimes people use this opportunity to introduce efficiency into their system, take out the jobs that they don't need, and so on. This is happening. So as long as your revenue flow is weak and you are not able to access financing, it is impossible to detach it from job losses. What you can do is to pull down your costs outside the personnel costs, such that once that goes down, you are able to maintain at your current revenue level, you are able to deliver value, and then you can also retain jobs. This is just the reality in the whole world. It's happening everywhere, but we are kind of shielded here because our economy has not responded to that extreme extent as other jurisdictions have. And that you can call it luck. You can also call it because we are clearly an informal economy. Maybe that explains it. Then secondly, to deep water asset monetization. As you are aware, a number of disputes around the deep water fiscal regime and fiscal agreement between NNPC and our partners. We have resolved most of them. We have gotten alignment through very fruitful and strategic engagement with our partners to take away many of these disputes, and that will bring back the partners into the point of investment. I can confirm to you that in two of the assets that she has mentioned, I don't want to call the names, we're actually very close to delivery a point where we can sign up agreements and take an FID in some of them. So we are resolving the issues, and above all, once we're able to put the PIB, or let's not call it PIB, petroleum legislation in place as quickly as is possible, to take out some of the gray areas that is stopping investors from putting their money here. And and ultimately it will bring back the deep water into production. No company will go and put three, 4 wells in the deep water, $30, $40 million, and just walk away. Nobody will do this. And we know the reason that this is not happening. One is the fiscal environment, the disputes that we have, which we have resolved most of them. And once we sort out the fiscal issues, then the other thing is the Koro issue that is there, which is not allowing banks to lend money to people. But this will go away, Koro will go away. And I'm sure that you are seeing every country is coming back to work. New Zealand has announced that it's zero Koro, so many others very soon back to business.
So this conversation you are talking about, does that include deep water gas? Because currently there's really nothing governing deep water gas.
Gas is simply because you don't have the gas deep water fiscal terms. That's what I meant. Once you're able to put off and understanding an agreement, you have the legislation to support it, then you're in business. That's what I mean. So Abdulaziz, I have to stop. And I would like to thank all of you for listening to me, for all your time, and for the privilege given to me to speak to this distinguished audience. And I continue to be grateful to Council for making me a fellow of the Nigerian Association of Petroleum Explorations. Thank you very much, Abdulaziz. I have to sign off for another engagement.
No problem. It's our pleasure to have you, and do have a fruitful day. Have a great day, sir.
Thank you very much. I appreciate it. Thank you so much.
All right. Okay. All right. Good afternoon, everybody. That was the Group Managing Director of the NNPC, Mele Kyari, a fellow of NAPE. We'll be calling on our president, the president of NAPE, Mr. Alex Taka, to share his closing remarks.
As usual, our God is
All right.
Hello?
Okay, we can hear you.
Okay. Once again, I want to, on behalf of the Executive Committee and entire membership of NAPE, to sincerely thank the GMD of NNPC, my chief executive for the whole corporation and the oil and gas industry in the country, for making time to be a part of this wonderful program, third in the series. I feel so honored looking at the loaded schedule he has and the impact of his response to today's event. Every participant will agree with me that the speaker for today has caused an attraction of close to 1,000 participants. This is the highest we've had since we started, third in the series. We have close to 1,000 participants worldwide in today's event. We're very proud of the delivery and handling of questions. For those that have been in doubt as per what the way forward could be post-COVID, I want to strongly believe that from what the GMD have said, there's really a way forward. And I want to believe as many participants that have been a part of this program are convinced that there's a way forward. NNPC is the biggest outfit in the country. Lots of initiatives. We have a GMD that has experience that cut across from upstream, midstream to downstream, even outside the streams, from the response to questions that were even meant for DPR director. I'm even happy that DPR director took time to join us as well. So we are grateful to the GMD, my boss, the head of my own constituency, the support NAPE have received in the past, and continue to receive. That is what is taking us to greater heights. We are very proud of today's event. It has given a lot of people that had been in a depressed state with respect to COVID and the way forward, some hope. I want us to live here with that hope, to be assured that there's no better person to have given us that hope as far as this industry is concerned, other than the GMD of the NNPC. I want to sincerely express our appreciation to the organizers of this program. The PE, this event is under the leadership of the president-elect. We had our IPP based in Abuja, who monitor and coordinated this very effectively. We appreciate your effort. We appreciate the participants. We thought this event wouldn't have been as successful as it went all the way from beginning to the end. We took extra time and we kept seeing more participants coming on. We appreciate each of you. We thought we won't have a webinar session of this magnitude. We want to encourage each and every one, the media team, led by our public secretary, our able public secretary. You will be surprised he's coordinating this from offshore. We're very proud of you and the entire publicity team. We cannot thank each and everyone enough. Once again, I want to sincerely appreciate the GMD. We continue to key into your vision to move NAPE forward. You have made us proud. A member, a distinguished fellow of this association, our great NAPE, leading the cooperation at this trying period. We are not in doubt that the president made the right choice. We're keen into the TAPE, transparency, accountability, and performance excellence, which is your vision. We're keen into that as NAPE. That's why we're able to make progress to this extent. We continue to sustain this great association. We continue to keep the hope of our members alive. We sustain the webinars and the technical sessions, and we want to assure our members and participants that NAPE conference will still hold. COVID-19 will go off before November. We are going to have more topical issues that will be handled by the GMD and other leaders of the industry. Like I've said, this is the third in the series. The very first was challenges and opportunities arising from the COVID-19. The second in the series was the new normal. And this is the third in the series, the impact and the way forward. You will agree with me that there's nothing that has been asked that the GMD couldn't answer. We appreciate you. We appreciate everybody working around you to make this happen. We appreciate our media team once again, the president-elect, and every participant. And finally, we appreciate the staff of NAPE Secretariat. You have done so much. We appreciate you immensely for making time and putting in so much effort day and night to make this event happen. Time will not permit me. I appreciate the speaker, all participants, and all that have worked behind the scene to make the event of today a success. Thank you once again. God bless.
Thank you, Mr. President. Before we switch off, please, we're going to have a technical business meeting in a week's time. It will also be on Zoom and all NAPE online platforms. Again, next week, 17th of June, we will be having a technical business meeting. And again, I will try to bring and share the best of technology and technical competence across the industry. For images, videos, and media from this event, please go to NAPE Nigeria on all our platforms, from Twitter to Instagram to YouTube. Like the President said, do have a very good day, and thank you for joining us.